Thanks for joining us today on The Close. I'm Morella Fernandez. Markets close in 30 minutes. Let's get to the stories we're following in the BNN Bloomberg newsroom. South Korean company Hanwha says it will use steel made at Algoma's Sault Ste. Marie, Ontario plant to build armored military vehicles in Canada. The deal is contingent on Hanwha winning the bid for Canada's new submarines. The company says Algoma Steel is part of a partnership between it and Canada's Automotive Parts Manufacturers Association to produce a new range of industrial and military vehicles. AI giant Anthropic is confidentially filed for a U.S. IPO. The Claude developer recently raised $65 billion in a funding round with a valuation of $965 billion. That's surpassing OpenAI's value for the first time. The number of shares to be offered and the price of the shares have not yet been set. We're watching the price of oil today as talks between the U.S. and Iran continue to unfold. The American president says talks are still on, adding Israel and Hezbollah have agreed to stop attacking each other in Lebanon. Donald Trump's comments came after Iranian state media said the country will move to fully block the Strait of Hormuz, and that negotiators will stop exchanging messages with the U.S. in retaliation for ongoing ceasefire violations. Here is where we are on the markets right now. The TSX is pulling into the green, 18 points up on the day. Let's have a look south of the border. The S&P 500 up 31 points, 0.4%. The Dow Jones up about 40, well, there you go, 50 points up. And the NASDAQ up 0.6%, 169-point move so far on the day. So again, we'll keep an eye on oil, but it was surging earlier in the day because of the comments from Iran that it would keep the strait closed. For more on today's market action and investment outlook, we join Jeff Barrett, general partner at Barrett Capital Holdings. Thanks for coming in.
Thank you.
Okay, so here we go again. Talks on, talks off, all within 1 day's time. Do you expect any of this to affect the tech sector specifically in earnings moving forward? Because they're on a run.
Yeah, look, obviously, if there was some sort of prolonged or escalated war, that would affect stocks. I think that's no question. I don't see that happening. I think the administration, and I said this before, is heavily reliant on the wealth effect to keep the consumer spending in the U.S. If there was weakness in the stock market, I think that would motivate them. And the second thing I would say is midterms are not that far away. And I think by September, you have to have this cleaned up because then you go into a November vote on the midterms. And I think, you know, to lose Congress would be harder for the administration, and they clearly do not want that.
We also had an IPO for Apotex that was announced. This was a Canadian company, I guess, that got bought by a New York investment firm, and now they're offering shares. What did you think about it? Is there appetite?
Yeah, so look, Apotex is a well-known company, the family, and there was a lot of controversy around that, as you're aware. Sold that, I think it was 2023, to SK Capital, which is a private equity firm in the U.S. They've done incredibly well with it. I looked through the prospectus, and so they've increased margins on EBITDA about 10%, which in the 3 years that they've owned it, which is really incredible. The business kind of grows mid to high single digits.
And they do generic drugs.
It's generic drugs, so it's a story on healthcare and healthcare spending. I suppose you could go into things like weight loss drugs, which are going generic. So you look, it's a good little solid business. It's not that little, actually. It's like, you know, it's 10 billion on, actually closer to 15 billion on IPO valuation. And, you know, I was worried about the leverage, but because they brought the profits up so much, it actually is going to be sub 3 times levered after proceeds. And so that's a fairly safe name to own. And I think Canada lacks stocks in the healthcare sector like this, so I think people will flock to it. But I also think Canada needs this. I mean, we've had an anemic IPO issuance for the last 3 years, 4 years, and equity issuance generally. We should be about 10% of U.S., and we're average 20 in the last couple of years as opposed to, say, 35 billion. And so I think Canada needs us to get the economy going. I think we've all seen the GDP stats. We could argue that, but like we're in recession technically. And And I think Canada needs this to get the economy moving, and it's great that it's listing here. I guess I would ask, why didn't they sell it, right? The whole business, or why do they want to keep it? I think that's a good question for the IPO. But, look, they're not selling that much stock on the IPO, so they may see upside in it, which I do. So I think it's a solid company. It's got good underwriters behind it. I think every underwriter in Canada is on it. Look, it's a good sign. I'm happy about it.
And part of the family office apparently still going to own about 14% after this is done. Okay, let's get to software stocks. We're having some momentum today, Constellation Software being one of them, Open Text being another. We've seen them flattened for so long, sort of at the end of last year. Where are they getting this new life from, you think?
Yeah, so a couple things. So why did they sell off? Was it they were a use of funds so people could invest in AI stocks? Or were people really worried that software would get destroyed by AI? And I don't know anyone that can forecast that. And so maybe you put a discounted multiple, but that's the way I saw it. It was a source of funds. And so these stocks were left and people were uncertain. They came out with Q1 numbers. I think we all saw the gain in Snowflake. I think we saw a muted reaction, but not a negative reaction to Salesforce. We saw some other software companies do decently. And so I think people have conviction. Software usually can see out at least a year, if not 2 years, based on their business models. So I think people, the stock market looks at 6 months. And so I think investors have more conviction in these names than they did. And so the whole software sector has gotten a bid from that. I think even MongoDB had a good set of numbers. And so Constellation certainly trades with that. My worry with Constellation is they lost their founder and driving force, right? And Mark, I forget his last name, but they were an acquisitive company, and I would wonder, without the leadership, if
Leonard, right?
Yeah, Mark Leonard, if they could continue that acquisition stream that they've done. I question if there's management depth there. Some people would know that better than I, but that's why I've always stayed away from it, but maybe flocked more towards the ServiceNows and the Salesforces of the world.
Okay, let's get to Berkshire Hathaway. We've seen the first big move by the Warren Buffett takeover of Mr. Abel, and I'm wondering what you think about it in housing. And I was kind of like, okay.
Yeah, well, so what I would say is housing is not in favor, trades at single-digit PE multiples. And so that is very positive for a value group like Berkshire to capitalize on that. If you believe that housing costs fall and interest rates fall, then housing could really take off. And that's the type of Berkshire trade that you would naturally assume that they could take longer duration view on things, and they know the housing sector pretty well because they have a lot of exposure to it. This particular acquisition is more focused to the Sun Belt, which is really where the growth in population in the U.S. is coming from. And so I could see why he sought this particular home builder over others. From what we've seen with Abel so far, he likes low PE multiples, and that's all he seems to look at. Like he added to Macy's, which is one of the lowest PEs that I can find. So the interesting thing is if this stuff works out, because sometimes valuation is cheap for a reason, because it's a bad business. And so I would worry that he's a little too value and maybe not enough at analyzing the businesses, but time will tell.
Okay, Jeff, I'll leave it there, but thanks for coming in.
Thank you.
All right, we're going to take a quick break. Up next, Anthropic formally filing for a U.S. IPO. We'll take a look at that in just a moment. This year shaping up to be a historic one for AI IPOs as Anthropic confidentially files its prospectus today. Of course, SpaceX and OpenAI also preparing to go public later in the year. Let's go to Hadam Diab on this, managing partner at Gerber Kawasaki Wealth and Investment Management. Good to see you. Thanks for joining us.
Hi, Marella. How are you?
I'm good. So no share price has been released. What do you expect the company to be valued at when it does go public in the fall, perhaps?
Well, we know the valuation is at $965 billion because they just closed a round of $65 billion a couple of weeks ago. which for me was quite surprising because only in February, so for less than 4 months ago, they had a valuation of 350 billion. So the growth the pace is really insane. So I think that's around the trillion.
Okay, so let's talk about the fact that Anthropic and OpenAI will both go public this year. Does it matter who goes public first? And if it does, why?
I think it does matter because there is sentiment really matters, right? And I think who sets the pace and who sets the valuation for the markets is important. I think OpenAI filed a couple weeks back because their numbers just are not as good as Anthropic. So they probably are afraid that the market is going to punish them if Anthropic went out first. So there is definitely a lot of competition between these two companies, a lot of shade being thrown between the CEOs and so forth. So I think it does matter for the market because that's going to set the metrics.
Okay, which large language model would you say is actually winning the race right now between those two?
Such a good question, right? Right now, Anthropic seems to be in the front seat. I think everyone is using Claude. Claude is just way better. But that also changes, right? Like I think OpenAI was leading it a while ago. That may change also the next 6 months. But the reality is what Anthropic has done very, very well is they've gone through the enterprise market, right? They got after companies and businesses, and every business person that I'm talking to is trying to figure out how they incorporate Claude or agents within their business processes. And Anthropic's processes or models are just better. But again, that changes, and also they are compute constrained. So that's another thing that we need to look at.
Okay, so you mentioned that OpenAI might get sort of hit if Anthropic goes first. Are there risks for Anthropic going public? What are the challenges for them?
We tell this to clients all the time, right? Being a public company is very different from being a private company. And simply because any bad news, there's a lot of volatility in the stock and so forth. But the reality is these businesses are so capital intensive. They need to spend so much money on compute that they have no choice but to go public so they are able to raise money. But also, they're such a large company from a valuation standpoint that it's just ridiculous they're staying private. So I think there is that too.
Okay, let's talk about how investors should view it. You mentioned, of course, volatility because every headline plays into your share price. And we saw headlines, of course, with Anthropic talking about the Pentagon use of its AI models. And there was a lot of controversy there. How do you think investors should view Anthropic going public as far as the risk to volatility?
Well, I think right now everyone is focused and excited about the $40 billion run rate in revenue that Anthropic is doing. I mean, let's remember this company wasn't even around 3 years ago, right? These numbers are massive, and everyone is willing to pay for that growth right now. But when I say everyone, is mostly VC companies and ultra high net worth individuals and really large tech companies that are investing in these businesses. Once you go public, we get to see your financials. We get to understand your balance sheet. We get to understand your revenue stickiness. We get to understand your margins, and I think that becomes a little bit different because now investors are scrutinizing everything a lot more. And that again with headlines like the Pentagon, any negative headlines could impact the stock negatively. So again, once you go public, it's just a different game.
Okay, so let's talk about the fall timeline for the IPOs for both of these companies. And SpaceX, of course, is expected to go this month. If you were allocating money, what would you put where?
Well, that's a really good question too, right? Like, do you sell your mega cap, Max 7 companies to buy Anthropic and SpaceX? I think the reality is we just don't know. These valuations are very expensive. Even with SpaceX's S1 already available, we don't really understand how these valuations are going to work out in front of the market. I want to wait for a couple of conference calls. I want to hear how the CEOs speak about their markets. I want to see how the market handles these companies before really I get involved. I think with Anthropic and OpenAI specifically, we haven't seen these large models talk about their business, talk about their TAM, talk about their revenue metrics. So I think those things that we need to wait for and kind of see. And then maybe after that, yeah, you need to buy these stocks because they're going to become so important, like an Apple or a Microsoft or any of the mega cap companies that you just have to own.
Yeah, they take out some of the Mag 7 to become a part of that top tier group. All right, Hatem, got to leave it there. Thanks for joining us today.
Thank you.
Coming up next, NVIDIA, another Mag 7. Shares are up today. The company announced it's going into the PC market. More in a moment. We're watching shares of NVIDIA today after the CEO, Jensen Huang, announced the company's expanding into the PC market with a new processor developed with Microsoft. He stated it's a reinvention of the computer. It's as big of a deal, he says, as the reinvention of the phone into the smartphone. We got more from Angelo Zeno. He's equity analyst, senior vice president at CFRA Research.
When we think about the PC industry, it hasn't really turned into much of an industry or much of a growth driver here over the last decade or so. There is innovation going on the PC side of things, and it is kind of the shift towards AI PCs. The PC is going to be able to do a lot more for users looking ahead, especially when you start thinking about things from an enterprise perspective. But I think this is more along the lines of, hey, listen, there's disruption going on. Things are moving to the edge. NVIDIA needs to have an offering on that side of things. They now have something as far as a product that they can offer to PC OEMs. And I think more importantly, as we continue to shift towards this world of computing at the edge, AI kind of inference workloads, and away from more of these the training use cases, NVIDIA needs to find a place to really continue to be relevant, and I think this really does that. I think this really is just the start of a lot more to come across a host of other industries, but it's good to see this from NVIDIA. I don't know if I'd necessarily agree with the comment from a magnitude perspective, but I think it's absolutely important, and I think you're going to see other competitors also continue to make offerings similar to this across the PC ecosystem.
And before we move forward, just in terms of what this is essentially combining powerful AI training and inference chip technology and then integrating that into a regular PC computer. Is that right?
Yeah, I mean, it's essentially being able to do a lot of, think about what you're thinking of from an LLM perspective, a lot of the kind of the tasks that you would normally kind of, throw into the cloud and ask the cloud, being able to do it on your device, being able to do a lot of this stuff, even when you're potentially not connected to the internet. So, clearly it's important. But again, it's one of those things where we were moving towards this type of world with or without NVIDIA, and the fact that NVIDIA is going to kind of, push the capabilities, and given what they offer, across the stack and then on the software side of things, I think NVIDIA's got the potential to do a lot more than maybe some other competitors out there can.
Interesting. Okay. I do want to talk about the partnership that NVIDIA has, though, with Microsoft, because I'm wondering if that highlights the importance of software when it comes to advancing AI moving forward, or at least certain software companies.
Yeah, I mean, and NVIDIA has continued to pound the table on the whole kind of, these SaaS-oriented companies, right, continuing to say that they are relevant and that there's a place in this world for them. And whether we're talking about, Microsoft and the type of tools that they provide and what they've, announced with NVIDIA, and this is an important week for Microsoft themselves. They've got their Build conference going on. Satya is going to have his keynote tomorrow, so we'll see what comes out of there as well. But I'd expect everything to be kind of hinged on this agentic AI type of shift. Again, similar to what we saw from Alphabet just a couple of weeks ago at their developers conference. So you're going to hear a lot of that. And then next week with Apple at their developers conference on the smartphone side of things, right, in terms of the personal use there. So again, I think the NVIDIA a Microsoft partnership is clearly important. We're going to have tons of partnerships out there. This is the entire tech ecosystem working together in many respects, but we're now just starting to see what you can do in terms of on the enterprise application side of things, as well as on the device side of things, as far as enterprises are concerned.
Yeah, because you mentioned Apple, and I was going to ask, like, is this something you think we'll eventually see come to the smartphone, or maybe not eventually? Maybe it sounds like it's probably maybe sooner than what I thought.
Yeah, no, I mean, you'll see a lot next week. I mean, as far as the AI Siri integration is concerned, I mean, they're finally going to hit this right. We think next week they're going to announce it. They're going to unveil it to all those developers, and we're going to see, I think, a full rollout this fall. So again, I think, now this is the year where you're actually seeing AI actually being put to use cases, right? And that is with these agentic AI systems, we're now, and it requires significantly more compute, which is clearly what's driving these chip makers and the infrastructure players out there. But, as we kind of roll out later this year, I mean, you're going to see consumers essentially all over the place using AI a lot more. If they haven't used it in terms of ChatGPT, now they're going to be pushed to it as far as their devices are concerned. It'll be right in their hands. So I think you're going to get a lot more consumers out there really comfortable with AI, and that's only going to further push the adoption overall of AI.
And I wonder, too, like if AI-powered PCs become mainstream, as you say they will be, what kind of additional pressure could that put on chip manufacturers like Taiwan Semiconductor, which are already kind of working to keep up with demand at this point?
Yeah, no, that's a great point. And, you look at 2026 right now, we are definitely in a supply-constrained environment. As you go into the second half of the year, I think that things are only going to be more supply-constrained in nature. Clearly, all the needed chips are being pushed on the server side of things, the AI server side of things, and you're going to see a lot of consumer-oriented products out there potentially not even come into the market, or in some cases, if they enter the market, they're just going to be heavily supply constrained. Clearly, a company like Apple is one where they've got the very deep ties across the supply chain. So in many respects, they could actually benefit from some of the supply constraints out there in terms of taking some market share. But all in all, I mean, as we kind of look ahead here into the second half of this year and potentially even into 2027, expect the market to be supply constrained, especially for consumer devices. And you even think about what you need as far as shifting towards AI at the edge. You're going to need a lot more memory at the edge, right? So that's going to put even more pressure on some of these memory makers out there as we look ahead to these next-gen devices.
Angelo Zeno is an equity analyst, Senior Vice President, CFRA Research. A last look at the markets before the end of the trading day. We could be in for new record highs again south of the border. The TSX today up not much, or actually down, 29 points on the day. It's been up and down all day, but right now down close to 30 points at 34,741. Let's move south of the border. Price of oil moving up at the start of the day. S&P's up 17 points, or about 0.25%. The Dow up 57 points. And then the NASDAQ, 100-plus point move up on the 8.4%. The NASDAQ and the S&P in for another record close. We're back in a moment with the end-of-day numbers. Here are the closing bells for the end of the trading day. At the NASDAQ is Crescent Biopharma ringing the bell. And in New York, it's the NYSE International Retail Forum ringing the closing bell. For Toronto, it's CFA Society Toronto celebrating the Society's 90th anniversary. You're watching The Close on BNN Bloomberg. I'm Morella Fernandez. Here's how we ended the day on Bay Street and Wall Street. The TSX did end the day down 34 points. It's been up and down all day, so it ended the day down 0.1%. But another record close for the S&P 500. It is up above 7,600, just above, 19 points up on the day, about 0.25%. The NASDAQ also a new record close for the first time above 27,000. Ended the day 27,086, up 0.4% or 114 points on the day. Let's get to the movers in Toronto. Parex, the biggest gainer in Toronto, it's up 10% or $2.47 to $26.52. Bloomberg's Stephanie Hughes has more on that in just a moment. And then a bigger day for software stocks. Celestica moving up 10.4%, a gain of $55.23 today, taking the stock price to $588.24. BlackBerry, the other mover, it's been up and down since reporting earnings, definitely up today, 8.7%, or $1.08 to $13.44. In the red today, we have some of the miners. So Orla Mining is down, but that's because it halted operations at a mine in Mexico when unionized employees stopped working. Let's get to Equinox. It is also losing today 8%, down $1.54, taking that price to $17.26. Let's bring in Bloomberg's equities reporter, Stephanie Hughes. She joins us now. Stephanie, we had Parex down today. Tell me what led Parex to move down.
Absolutely, Marilla. Happy Monday. So Parex Resources had been the top performer today on the TSX for most of the trading day today, as shares gained by nearly 11% at their highest point. That's its biggest intraday boost in over a year. And there really are two things going for Parex today. First off, it announced that it completed its acquisition of Frontera Energy's exploration and production assets for about $500 million, which is really expected to add some scale and barrel production capacity to the Calgary-based company. That, and it's also been rising in tandem with other TSX-listed oil and gas names, as earlier reports suggest that Iran would halt its peace talks with the U.S., which renewed a rally in oil prices. So that caused West Texas Intermediate to jump by 6.5% to $93 a barrel earlier today, as this prompted further concerns that the Strait of Hormuz would remain closed for longer. So President Donald Trump in the afternoon shared some reassurances saying that talks are continuing rapidly with Iran, and that Hezbollah agreed that all shooting would stop. So that calmed some nerves among traders, sent stocks rallying a bit higher, sent oil prices down a little bit lower. And after these headlines came out, oil ended up pairing some of those gains. And then we saw some more gold miners and tech names go into the top 10 performers, as you mentioned. But Parex also managed to keep its gains, being one of the only oil and gas names that really held on to its rally today, Marilla.
Okay, let's get to Canadian banks. They reported last week. Two of them have shares going in opposite directions today. What have you noticed?
Yeah, that's right. So I want to highlight two Canadian banks that are trading in opposite directions thanks to some rating changes over at Scotiabank. I'll start with BMO. So Bank of Montreal gained by nearly 2% at its highest point today, which helped the bank inch to an all-time high after Scotiabank raised its recommendation on the lender to a sector outperform rating from a sector perform rating. That's kind of like moving a stock to a buy from a hold. So the analyst Mike Rozanovic based that rating change on BMO's strong potential lending volume upside in the U.S. as it's meaningfully expanding its footprint in California. And they also added that there's clear momentum in the bank's return on equity trajectory that makes the fiscal 2027 target look that much more achievable. On the flip side, CIBC came under pressure to the tune of nearly 3% at its lowest point. That briefly brought the stock price down to its lowest level since about mid-April when it was at its lowest point. And that's after Scotia downgraded CIBC to a sector perform rating. The analyst said that while the team is still constructive on the medium-term outlook for CIBC, they believe the bank's nearly 2-year outperformance relative to its peers could start to ease in the quarters ahead. They also flagged some downside risk associated with the capital markets division. And then they also said that CIBC's exposure to the Canadian lending market could be a bit of an issue, just given that that's been trailing the U.S. market, given some of the challenges we've been seeing in the Canadian economy. So two different perspectives on two different banks, but it should be noted they both came ahead of analysts' expectations when they reported their second quarter results last week, Marilla.
Okay. Bloomberg's Stephanie Hughes in Toronto with that. Let's go south of the border. We have Bloomberg's Avalon Purnell joining us there with the movers in the U.S. Avalon, some interest now in MGM Resorts, and that sent the stock up over 17% last I looked. Where did it end the day?
Yes, it ended up 16% to actually be even above the offer that it received. So MGM Resorts was higher today. That's after Barry Diller's people proposed to buy the remaining part of the company. He already owns a chunk of it already. And People is offering a little bit over $48, about $48.30 for the remaining part of the company. And that's really interesting considering just last week, their rival Caesars also was taken private. So it seems like maybe a trend may be building here for those casino stocks and entertainment companies like MGM Resorts.
Okay, so let's get to a solid rally for ServiceNow. And I know that stock has been down as much as 32% earlier in the year. A lot of the software stocks beaten down. What happened today?
Yes, ServiceNow, along with several other software names, was definitely higher today, almost hitting about 10% into the close. And that's after NVIDIA's CEO really brushed off those concerns about how exactly AI will be impacting software companies like ServiceNow. Instead, he says that he actually expects more use of software companies like a ServiceNow because of AI in the future. And obviously, that's very welcome news for a lot of these companies that have been pummeled throughout the year as investors continue to question how will they survive as AI continues to get better and better.
Okay, let's get to Revolution Medicines. They've been working on a cancer drug. Clearly, something is working well for them. Tell me about what happened there.
Yes, this past weekend, Revolution Medicines released the full results of their pancreatic cancer drug. And to say the least, it was really, really great. We got more interesting information about how exactly this drug was able to help those patients have less painful cancer symptoms, and it also nearly doubled the survival of patients. Now, important to note that this drug is not a cure, but it is a new standard of care that could definitely transform the treatment of some of these patients, especially for a very hard to treat and hard to detect area of cancer like pancreatic cancer. So the stock rose to a record high today, up about 3.9% today on that news.
Avalon Purnell with the latest out of the U.S. Thanks for that. Up next, North American markets stay mixed. We had the oil price go up and then come back down on some news in the afternoon. We'll pick it apart when we come back. Oil was surging at the start of the day because of the conflict in the Middle East. Some of that moved back after Donald Trump saying that Iran and the U.S. are still talking. So let's start there with Matthew Tuttle. He's CEO and Chief Investment Officer at Tuttle Capital Management. Sorry, we'll get to oil in just a moment, Matthew. I do want to start with Anthropic, which has filed confidentially for its IPO and doing that ahead of OpenAI. And I know these two are in big competition. My question is, if you have OpenAI and you have Anthropic and you have SpaceX, are we looking at a new series of Mag 7? Are some of the Mag 7 now going to get kicked out and replaced?
We might. We're looking at something the likes that we've never seen before. You know, I've been investing since 1981. I've seen hot IPOs. We've never seen anything like this. So we really don't know what the impact is going to be. But we do know individual investors are going to be clamoring to get into all three of these names. They're going to take money from somewhere. And yeah, I mean, we may need to redefine what the Mag 7 is, or maybe we'll get Jim Cramer to come up with some other acronym to describe kind of what's going on, because we could be entering a period where, you know, we need more than 7 or we need a different 7.
We're seeing more record closes for both the S&P and the NASDAQ. Both closed higher again today, one above 27,000 for the first time. I mean, where's that optimism? With the conflict in Iran still happening, oil prices surged up. Yes, they pared back a little bit at the end of the day. But where are people getting this momentum from?
Yeah, so people are looking at what's going on with the oil prices, what's going on with rates, what's potentially going on with inflation, which we think is going to be higher. And they're saying that's temporary. This whole AI build out, CapEx spend, all the AI bottlenecks, people are looking at that as the future, and they are crowding into that trade. I mean, we've got a lot of FOMO going on in this market. It doesn't matter what oil prices are doing, doesn't matter what rates are doing. People want to buy the semis, memory, photonics, space. It is definitely a stock picker's market here, and money is flowing into anything AI related.
Okay, let's get to MGM Resorts. A big gainer in New York, up something like 16, 17% on an offer of purchase. What is the appeal, you think, for Barry Diller?
Yeah, I mean, I think he's taking on the rest of the company that he doesn't already own. They've got a great set of assets. It makes a lot of sense. And, theoretically, somebody else might try to step in, but I don't think so. It looks like the market's pricing that this deal is going to happen. Great move today. Again, I'm not a whole lot interested personally in anything that's not AI related. That's where the money is going into. But, this is certainly interesting, and I do think it makes a lot of sense for him.
Let's get to Berkshire Hathaway's new CEO. So Greg Abel making his big first acquisition today. He bought a home builder. And I'm wondering what your thoughts are on his choice of buying something in that sector.
I mean, typical Berkshire type of deal. Boring, the type of company that you're not really thinking about, below the radar screen. What I'm going to be real interested in, because this is Abel's first deal. Buffett, for all of his long-term track record, when he's picked different stocks in different areas, he hasn't been perfect. You always think of him, the Oracle of Omaha. But, for example, in paint, he picked the wrong paint company. Dairy Queen, he should have done McDonald's. There are a lot of home builders. It'll be interesting to see how this works out, how the new guy starts his tenure. Did he pick the right one? But it is certainly your typical Berkshire trade. So, that they're looking like they're going to be doing the same thing they've always done.
NVIDIA. Let's get to NVIDIA now moving into the PC space. What are your thoughts on that?
Yeah, I mean, NVIDIA wants to control the world. I don't think anything is going to stop them. Cloud, AI is now moving from cloud to device. And, this is just more fodder for the fire of everyone going into semiconductors. I think it's great for the overall marketplace. Yeah, I always tell people, I think NVIDIA is a must own. It's gone up a lot. Are you going to get a lot of alpha from owning NVIDIA here? Is this going to move the needle for NVIDIA a whole ton? I don't know. It is a behemoth at this point. But certainly if you're bullish on semis and what's going on, this is the logical next step that you want to see.
Okay, that being said, NVIDIA CEO moving the needle on software today, definitely, and the software company ServiceNow. You like it. It's a stock pick for you. Is it more so because of his comment, or was it already in that sphere for you?
So what Jensen says, we're going to pay attention to, certainly. We're not going to buy something just because he says he likes it. But Jensen and Trump are two people that if you're a stock picker, you want to pay attention to what they're saying and what they're doing. So that certainly helped. The stock has been crushed. I would rather be buying, say, like a Now today at these prices, especially with that headwind, than maybe like a SanDisk or a Micron that's already gone up so much. So, we have been taking our Mimi ETF and we've been buying some software stocks. Now is one we bought the other day. Trade Desk is one we bought last week. And we're going to be looking at some of the other software names, trying to figure out who isn't going to be crushed by AI.
Yeah, people have been trying to figure that out for many months. Let's get quickly to your last stock pick, Inflection. Tell me about it.
Yeah, Inflection's a quantum stock. That's a Trump name. So the government announced they're going to be putting money into the quantum names. Inflection was one of them. I like it because it's a below the radar screen name. A lot of people have heard of Rigetti and IONQ and Qubits and all those. Not so many people have heard of Inflection. It came public through a SPAC merger, which is probably why it doesn't get the attention of some of the other names. So I like it as a below the radar screen way to play the government putting money into quantum.
All right. We do have to leave it there, sir, but thank you for joining us. Appreciate your time.
Thank you.
All right, up next, the reaction and warnings of overreaction to the words recession in Canada. Back in a moment. Conservative leader Pierre Poilievre calling for an emergency debate on Parliament Hill to address the recession he says the Liberals have caused. CTV's Jeremy Chiron has more.
In a Sunday morning letter to the Prime Minister, a push from Pierre Poilievre for Mark Carney to answer for the state of Canada's economy. Calling for an emergency debate in Parliament over the issue, you promised you would deliver the fastest growing economy in the G7. You delivered the only recession in the G7, wrote Poilievre.
This is a full-blown Liberal recession.
A Friday report from Statistics Canada showed the country's economy contracted slightly for a second straight quarter, meeting the technical definition of a recession. Poilievre lays the blame on the government.
This is people's lives. Behind these statistics are empty stomachs, empty fridges, and empty bank accounts.
We asked people in Ottawa what they think and what or who they blamed for it.
I do feel like times are tough.
It feels like a standstill, and a lot of people that you talk to, they feel like they're never getting ahead.
Are we really in this session as a result of factors that were the last 2-3 years, or is this a reflection of the current government?
Some economists poured cold water on the recession talk, arguing the declines are marginal and don't indicate a widespread downturn.
Economists tend to be very careful around using the word recession. The truth is that the economy is not in good shape. Through most of 2025, we struggled up and down.
But most are clear the country's economy is struggling to gain traction, and that can't be ignored.
We need to deal with this. The difficulty is that certain parts of the country are struggling, while other parts of the country really are faring quite well.
In a statement to CTV News, the finance minister's office called Poilievre's letter political theater, chalking up the downturn to external factors like the U.S. trade war and pointing to efforts to build new global relationships and attract major investment here at home.
CTV's Jeremy Chiron reporting there. All right, let's discuss this more with Bloomberg's Najud Al-Malih. She joins us now from Ottawa. We did hear today from the Bank of Canada on the recession news. What did they have to say?
Yeah, Senior Deputy Governor Carolyn Rogers cautioned against putting too much emphasis on this technical definition of a recession to negative quarters of growth. And she suggested instead that we'd have to take into consideration other metrics such as employment, such as some leading indicators such as StatsCan's preliminary estimate for growth in April, which showed actually GDP rising by 0.4%. And so while she didn't delve too much into the topic of recession, her message was clear that she wasn't jumping the gun to talk about Canada in a recession, and suggested that Canadians and others shouldn't put too much emphasis on that narrow condition of what makes a recession a recession.
All right. We heard in the previous report some economists talk about the GDP numbers, but I'm wondering what else you've heard from them.
Yeah, I mean, I think what's clear is that the economy is very weak. Growth in the first quarter came in at minus 0.1% on an annualized basis. That's much lower than the 1.5% growth that economists were forecasting and the Bank of Canada was also forecasting. So you take into consideration the GDP data, you look at the labor market and how we've had more than 100,000 job losses since the start of the year. It's clear the economy is not doing well. And the question is this going to deepen? Are we going to see some revisions to the Q1 numbers that show the contraction being deeper? Who knows? But as of right now, economists had a similar message to Rogers that she had today, which is that it's too early to say that we're in a recession, and that you'd have to see broader declines across the economy for things to meet that threshold. And so far, we haven't seen that just yet.
Najud, we heard from the Conservative leader reacting to that designation of a recession. Who else have you been hearing from?
Well, I think he has been the loudest voice on this issue of Canada being in a recession. And, we've heard from him since Friday very vocally on this issue. And I imagine that this is going to seize Parliament, whether economists think it's a recession or not, because the reality is the economy is soft. It's not doing well. And the Prime Minister hasn't had a chance to weigh in himself on this issue, on the latest GDP numbers. I'm sure he will be asked, and he'll have a robust answer to give on his perspective on this. But this will be a vulnerability for the government, because they're not going to be able to walk out and say the economy is doing well, and getting 2 negative quarters of growth will be an opportunity for opposition parties beyond even just the Conservatives to make the point that things are not going well, despite the Prime Minister promising to deliver a strong economy.
Yeah, more robust economy. All right, Bloomberg's Najud Al-Malisi in Ottawa, thanks for the update. Up next, we're about a month away from the primary CUSMA review deadline. We'll provide an update on the status of discussions among the North American partners when we come back. We're about a month away now from Canada Day, also the review deadline for CUSMA. Our next guest warns that Canada shouldn't be in a hurry to come to new terms if big sacrifices are part of them. Let's go to John Weeks. He's a member of the expert group on Canada-U.S. relations, former NAFTA chief negotiator. John, thanks for joining us.
Thank you, Marilla. Good to be with you.
How do you interpret that Canada is not even in the room for the discussions going on between the U.S. and Mexico?
I don't know. I think we should be there. And, they've said that these are basically technical discussions. But in the end, a trade negotiation is made up of a whole series of technical discussions, plus some high-level diplomacy. And I think you need to be there for all the parts of it. So I think we should be trying to make sure that Canadian negotiators are in the room for what's going on now.
Because what happens there will likely mean some pressure on Canadian negotiators, perhaps to give up more than they want to.
Well, I think the first problem is that, they've said that the Mexicans and the Americans, they issued a press release saying they're having technical discussions including on major industrial sectors. And I understand that they're actually talking about how they might improve the rules of origin, improve in quotes, in the automobile sector. So that's definitely something of major interest to Canada.
Yeah.
And if they start developing some ideas about how to put these different, for changing the rules, then we may have an uphill battle to try and change it to make sure our interests are taken account of.
Yeah. So basically, just to loop the viewers in a little bit more, they're looking at how much of an automobile, for example, would come from American both American resources and, I guess, American workers. And that could significantly affect Canada's contribution. Is the auto industry, you think, the biggest focus of these discussions?
Well, I think that is one of the biggest places where Canada stands to be put at some risk. But I think, potentially it's going to cover a number of other sectors, too. We still have major tariffs in place on aluminum and steel products, for instance. So that's a big problem as well.
You talk about the Fortress North America approach. Can you explain a little bit about how that works and why that could also be a problem for Ottawa?
Well, I think what the Americans would like us to do is, particularly in a number of major industrial sectors, is agree to erect trade barriers against countries outside North America, and in exchange for having lower tariff barriers inside North America. They haven't been clear about whether we'd still get back to the real free trade conditions we had with the United States earlier. And I think the problem here is if we start erecting trade barriers against other countries like the European Union or our partners in the Trans-Pacific Partnership, we may well, that'll violate our obligations under that agreement, and we'll have repercussions for the kind of trade relationship we have with them. So this is really possibly we get into a Fortress North America situation, and we make it much more difficult for Canada to diversify its trade relations with other countries.
Can you be a little specific about what sectors that would pose a problem for. I know we're sending more energy, and we now are getting more energy contracts with other countries, as you mentioned, European Union, China, maybe India. So I'm wondering if there are certain sectors that it would be hurt more by that Fortress North America idea.
Well, I think the government should be honest with Canadians about where it would be prepared to contemplate a Fortress North America approach, because potentially this could be a big problem in a number of areas. And basically, any area where you start creating a Fortress North America, it's going to create problems for us in our relations with other countries. I think to some extent, China's perhaps been the biggest focus in thinking about adopting this approach, but there's certainly been no assurance that it would be limited to China.
Wondering if Canada can delay the negotiations. Midterms are in November, of course. There could be a change in the power balance in Washington. But the second part of that question, of course, is can our economy withstand a delay?
Well, obviously we're under a lot of pressure. Some sectors are in real difficulty right now, and I think we need to do what we can do to try to alleviate that pressure or eliminate it. But it's not clear that we can do that very easily, and maybe not at all. And I think that the question is, do we want to enter a new deal with the United States now that would be less favorable than CUSMA, the current agreement that we have, and that we would agree to having duties applied to us? Or is it better to be constructive in the talks, but not be in a big hurry to conclude them? Because I think there's some prospect that Trump's trade policy is really under pressure in the United States. And I think, with the run up to the midterms elections and what can possibly come out of those elections, it's quite likely we'll see some shifts in American trade policy in terms of what they would actually like to see happen. And that could create more conditions in which we would have a better shot at getting a reasonable deal.
John Weeks, and we'll leave it there, sir, but appreciate your time. Thank you.
Thank you, Marielle. It's pretty complicated.
Yeah, I know that it is. Thank you for your time. Coming up next, SpaceX taking off. We'll take a closer look at what's fueling what could be the biggest IPO of all time. Back in a moment. What began as a rocket startup is now a big bet on satellites, AI, and Mars. With a projected valuation near $2 trillion, SpaceX IPO could reshape the markets. But as Bloomberg asks in this week's Short Doc, is Wall Street rushing in too fast?
SpaceX is taking off. And we're not just talking about rockets.
We've never seen anything like this.
SpaceX's initial public offering is expected to raise as much as $75 billion, more than double the record-setting $29.4 billion raised by Saudi Aramco in 2019.
This is the biggest IPO of all time.
We're looking at $2 trillion in valuation.
Elon long had said that he didn't really plan on taking SpaceX public, but that was before the merger with XAI, before he needed tens of billions of dollars to build out these ambitions.
But this massive valuation is also a test. Could all this hype make it seem worth more than it is?
If it's preordained, then it becomes hard to predict how much of the buyers are buying because of fundamentals or the valuation. So then that kind of distorts the market.
Investors are buying the dream.
Sure, we all know the dream, but what about the reality? Traditionally, an IPO, or initial public offering, was a primary way for companies to raise money. Going public was also a badge of honor. But today, companies have all kinds of access to capital to fund their early growth.
This is a huge narrative in the American stock market right now, where companies that used to go public at a very early stage now can wait really almost as long as they want because they have sources of funds that don't require public investors.
This trend has been fairly consistent, with the number of publicly listed companies in the U.S. falling since the 90s.
SpaceX is an extreme case, but it's definitely not a one-off. A lot of companies are choosing to stay private, choosing to scale privately, choosing to raise funds privately, and then go public. And when they go public, they're already a mega cap.
SpaceX's 277-page filing with the SEC takes about as long to read as A Journey to Mars. It depicts a conglomerate handling dollar amounts practically unheard of in any other IPO.
And that filing is giving us a little bit more of a peek here into the health of this company.
After 2023, the company made a profit of $791 million, only to lose $4.94 billion in 2025. But between 2024 and 2025, its total revenue continued to grow from $14 billion to $18.5 billion.
We're looking at an estimated revenue projection between 22 and 24 billion. But when you compare that to the total valuation of the company that SpaceX is looking at for this IPO, we're looking at $2 trillion in valuation. That is a very big discrepancy.
And you can see that discrepancy here. Looking at major tech stocks, investors value Tesla and Nvidia at roughly 15 times their annual revenue. They look like bargains compared to SpaceX and its price-to-sales ratio of 87 times.
SpaceX today is a very different company than the SpaceX that was founded more than 20 years ago. It is the largest satellite operator in the entire world with its Starlink constellation, with thousands and thousands of satellites operating in low Earth orbit that provide broadband internet to the ground below. So those are very real businesses that SpaceX has both commandeered and dominated.
This is full power, and liftoff. Go Falcon, go Dragon.
On top of that, it operates rocket transportation services, either sending cargo and humans to space, even Mars travel someday. Those are still quite speculative and years away. All of these ambitious IPO-related programs all rely on Starship, and it's probably the most ambitious vehicle that's ever been conceived for spaceflight. It's meant to be fully reusable. That makes it extremely complicated, and its development process has been kind of rocky in order to get there.
And this is a rocket that last time exploded on the pad, so like you want to think it's going to go well.
So much of its value proposition is tied up in stuff that hasn't quite happened yet.
Even though rockets and satellites have been its bread and butter, there's another more pressing reason to go public now.
They're also slowly becoming an AI company and building out data centers to both train and operate AI in the future. The amount of capital that they need to execute on all of these really ambitious goals is just going to require a lot more than maybe they can receive from all of their various businesses in a short amount of time. This concept of using space as, this new real estate for putting AI data centers, that seemed to be the game changer that got Elon thinking, okay, now might be the time to actually go public.
An important aspect of SpaceX's IPO will be its inclusion in the NASDAQ 100 index.
We have these big indexes, like the S&P 500. It tracks the biggest 500 companies in the US, or the NASDAQ 100, which is the biggest tech companies. Many companies, or dare I say all, would like to be added to them because it means millions and millions of dollars of passive funds.
This passive money comes from everywhere: pension funds, institutional investors, retirement accounts. Together, trillions of dollars flow automatically into funds like Invesco QQQ, which tracks the NASDAQ 100.
If SpaceX is in one of those indexes, it means millions and millions of Americans will hold your company.
Once the company is included in the NASDAQ 100, any investors who are buying the QQQ will by definition be investing their hard-earned money into SpaceX regardless of the valuation.
Inclusion in the NASDAQ 100 or S&P 500 used to be a lengthy process, but now, since many companies going public are already giant, the rules are getting bent.
The old playbook was that you go public, you undergo a seasoning period, you prove your profitability, your liquidity, and then maybe you get added. The new playbook is the fast-track entry. NASDAQ said, okay, we're going to fast-track our rules, so instead of being public for 3 months, you can be part of the NASDAQ 100, and so SpaceX chose to list with NASDAQ.
Still, changing the rules to fast-track a whale is not something you see every day in the markets.
There are a lot of risks when it comes to fast entry. There's price mismatch, liquidity, crowding, and there's also, of course, the over-concentration of mega-cap names, because increasingly, a lot of our holdings are just very few big companies. These few companies determine the future of your portfolio.
The market has become very concentrated. It's a very worrisome thing to a lot of people.
And SpaceX isn't the only big private company eyeing a blockbuster IPO while clinging to aspirational revenue goals.
If you look at companies like Anthropic and OpenAI and the rates at which they're growing and replicating themselves, those are going to be equally enormous IPOs probably in the not very distant future. You can see a case where maybe enormous companies become the rule as far as IPOs go.
Going forward, this is going to be the debate. How much dispersion should there be? Who are the winners going to be? And will the appetite remain for all of the other much, much bigger IPOs, it should be said?
Despite the warning signs, many are wary of underestimating Elon Musk.
He's really built an entire brand on turning science fiction into reality, and investors are willing to bet that even if he doesn't deliver on the timeline, some of these ambitions like orbital data centers or building a colony on Mars actually isn't out of the realm of possibility.
Yet the pressures of being a public company have a cost.
When you shift to a public company, your focus becomes more on short-term profits and how you're maximizing those profits for your shareholders. When it comes to space, there's a very long lead time of development. They also need to be able to fail. We've seen quite a few explosions. That doesn't always sit well with investors and shareholders, so it remains to be seen if SpaceX can actually pull all this off.
What looks like plausible ambition may end up being completely baseless hope.
For now, though, the market seems to have SpaceX FOMO on an IPO with potential massive payouts. Someday.
You buy at $1 trillion, you could potentially sell at $2 trillion. This keeps happening, and that's pretty much the story of why SpaceX makes sense to a lot of people.
Coming up, hot picks. We will zero in on 3 plays in tech when we come back. Time for hot picks. We zeroed in on 3 plays in the tech sector with Michael Monahan, partner and portfolio manager at Founder ETFs. And we kick things off with his thoughts on Dell.
It allows you to have your own on-premise AI server to run the foundational models, to protect your data and keep it safe, yet take advantage of the compute power of the foundational models.
Okay, and you say all 3 of these picks that we're going to go through are riding different parts of the agentic AI wave. Is that right?
That's right. We see Palantir, Dell, and Oracle all riding the agentic AI wave, just slightly different places of that wave.
And before we go on to your next pick, I just want to go back to Dell, because what are some of the biggest risks that you think are facing this company right now?
So we see growth for Dell. We don't see a lot of near-term risks. If you look at the last quarter, the growth on their AI server business was absolutely explosive. And then with Jensen's announcement last night that he's partnered to bring the CPU, bring an NVIDIA CPU to the desktop, Dell will be one of the beneficiaries of that. So we don't see a ton of risks for Dell right now. We see a tailwind from both on-premises agentic AI and the fact that we're now beginning to run agentic loads at the desktop, and Dell's a beneficiary of both of those.
Okay, your next pick is Oracle. Tell us why you like Oracle out of all the names you could have picked.
Oracle is attacking the boring but profitable side of AI infrastructure. So right now we're compute constrained. The constraints are as tight as getting energy into data centers, getting the data centers energized to be able to push tokens out. And this is Larry Ellison, who brings that founder mentality, the type of investment that we do. He had the vision to see that the world would be compute constrained several years ago and starting building out his AI data center business. So he's ahead of the curve as more people want access to tokens coming out of these AI token factories. Larry really put himself to be there first, and that's why we're so bullish. The stock got punished earlier in the year, but the stock action is showing that people now understand that we're AI compute constrained, and Larry has positioned himself to take advantage of that.
Yeah, I mean, punished earlier in the year when we were talking about that whole kind of software sell-off we saw at the beginning of the year. There's obviously companies that are, going to win from AI in the software sector, and some that will be made redundant. I'm assuming you believe Oracle is one that's obviously partnering with the right companies and is going to make it through. Is that right?
Yeah, we believe that they've got several hooks. So hook number one is legacy systems that will be the trusted endpoint, storage, and proof of record for existing corporate data. And then number two, a lot of these large corporates, if they're regulated, HIPAA, government data, et cetera, they can't put their data on a public cloud. So their only choice is to use their existing private cloud with Oracle or new Oracle private cloud. So they're very well positioned to take advantage of the growth.
Last hot pick is Palantir. So you mentioned this off the top, another one riding, a part of the agentic AI wave. Tell us more about why you like Palantir right now.
Palantir is very well positioned. The most important thing to remember for AI is that AI still requires really good human input. If you don't have human input, you get referred to what is colloquially referred to as AI slop. However, if you have a highly trained human operator on the front end helping guide the AI and then reviewing the AI's work, you magnify that human operator's capability. And with their forward deployed engineers, that's one of the things that Palantir is doing well, along with doing what's been a 20 or 30-year goal of a lot of business intelligence companies, and that is to take the disconnected data, whether it's living in an ERP system or a CRM system, bring it all together and make sense of it. And back to this theme of trusted endpoint, Palantir then takes the AI models, touches the existing enterprise software within the corporate, and is the trusted layer to bring that data out and analyze it. And then why we're so excited, the growth here is just really unprecedented. Rule of 40 went from 127 to 145. We think Alex will have a couple more quarters like that. And even though some of his retail investors have transitioned to chase the Microns and the SanDisks and the SOX complex, we think the institutional growth investors over the next couple quarters will come in. That's why the stock traded sideways and why it's been an opportunity for our investors and your viewers.
Michael Monahan is a partner portfolio manager at Founder ETFs. The federal government will award a multi-billion-dollar submarine contract later this month. It's between a South Korean company and a German one. The competition's ramping up, with South Korea's Hanwha now promising to use Canadian steel to build military vehicles if it wins the bid. CTV's Judy Trin reports.
A united front to announce a new partner in a plan to strengthen the auto sector.
How Canada's auto sector can pivot.
The diversification plan now includes using Ontario steel to manufacture Hanwha's Howitzer K9 and other vehicles in Canada. The South Korean defense company has thousands of orders from 6 NATO countries for these armored vehicles. Making them in Canada could be an important lifeline for the hard-hit industry.
The economic activity that comes from that deal for automotive is the equivalent of one new car plant here. And so what that means is probably 15,000 direct jobs.
The steel in the vehicles will come from Sault Ste. Marie's Algoma Steel, where about 1,000 people have been laid off.
We are the only steel producer in Canada that can make ballistic-grade steel for defense applications. It's a great opportunity to be part of a consortium.
But it's all contingent on Hanwha winning the massive bid to build Canada's fleet of 12 new diesel-electric submarines. Last month, the South Koreans sailed the KSS-3 to Victoria to show it off. The submarine, built by German competitor TKMS, is still under construction. But Germany is trying to make waves in other ways.
The program creates and sustains more than 650,000 jobs over the next years. The impact on the GDP will amount to 86 billion Canadian dollars.
As the economic promises increase, the government is hesitating but not ruling out splitting the procurement.
I don't know if you can categorize, Judy, the safe decision being splitting this down the middle.
I think what we're looking at here is making sure that we have a fleet that is interoperable.
Both the South Koreans and the Germans are offering significant industrial benefits. The Prime Minister says he'll make his decision before the end of June, just before the July 1st deadline for reviewing the Canada-US-Mexico Free Trade Agreement. Judy Trin, CTV News, Ottawa.
That does it for the close. Thanks for joining us today. We'll see you back here tomorrow.